Yesterday, the Canadian dollar fell to more than a 10-week low as a result of Canada's decision to block state oil from Petronas' $5.17 billion bid for Progress Energy. In his speech last week, Carney had a less hawkish bias for the first time since April. Right now, I'm joined on the line by Aron Gampel, Vice President and Deputy Chief Economist at Scotiabank in Toronto, to discuss this in further detail. So, first of all, Aron, there is still a 30-day appeal of the Petronas decision that could be used, but the initial reaction was pretty negative. What are your views on this decision, and do you think they will appeal it and be successful?
It's a very difficult time in Canada to try to figure out the foreign investment rules, because the government of Canada will soon release, within probably the next month, a policy paper that will become much more transparent as to conditions that they're setting for foreign investment, especially for companies that represent foreign governments and state-owned enterprises in particular. I think that more time is probably needed, and so this particular deal, which seems to has not gone through. I mean, I think there is a potential for it to go through once the guidelines are more clarified. And again, we have some. This is really a good-sized deal, but there's going to be a larger one, of course, with CNOC and Nexen coming up within probably a month as well. And again, while the market is looking at these deadlines as very important, I think the key here is the government of Canada is trying to come up with an equitable solution that will facilitate the needs of companies in this country for foreign capital to continue to invest and develop our large resource base, at the same time basically ensuring some safety and other factors that are needed for shareholders and for Canadians into the guardianship of their resources.
And what are your views on today's rate decision and on Carney's stance on interest rates?
The Bank of Canada has been keeping rates steady at 1%. This is the level that they had raised them to for the benchmark overnight rate when the recovery basically began to take off in 2010. And they have not really attempted after that of keeping rates steady any additional easing methods. And the reality of the situation is that even though our growth numbers are essentially in line with maybe the U.S. at the higher end of the G7 trends, our domestic economy has been holding up reasonably well, and of course, the Bank of Canada, to its, I think, credit, is taking a long-term view that eventually interest rates have to normalize. But of course, we're being compromised and confounded by developments around the world, which are taking a toll on growth and the like. So it's a very pragmatic, I think, way of looking at things and of adjusting policy, keeping rates steady here, using alternative measures, for example, either moral suasion or changing the macroprudential rules in order to tighten mortgage eligibility, in order to try to control household indebtedness and the housing boom that we've seen in Canada. They're using all weapons at their disposal to try to moderate growth and prevent any asset bubbles and inflationary consequences. But the reality is, at some point in time, interest rates have to go up, and what they are alerting Canadians who have taken on a tremendous amount of debt in recent years, that the risks are on the upside. And I think that many people had expected the Bank of Canada to become a little bit less hawkish, but the reality of the situation is we may not be getting interest rate increases now, but they are likely to come in the future, and much quicker, let's say, and sooner than other countries in the G7.
And now let's have a look at the housing market. Home sales have slowed significantly since July's mortgage rule change. What are your views on this, and how do you think the housing market will be performing in 2013?
The housing market is slowing for a variety of reasons. The changes in the mortgage eligibility rules and the macroprudential rules that we've both alluded to, but also the fact that affordability has been eroded by higher prices. And probably in Vancouver, that with the slowdown that we have been seeing in Asian markets in particular, in the Asian economies, and maybe a lot of the capital inflows, safe haven flows that were coming into the BC market has begun to slow. I think what we're seeing here is a sort of a midterm type of moderation in the fast pace of demand for housing. But this is a country where employment growth is still growing, around 1% on a national basis. We continue to chalk up gains on virtually every month. We still have very, very low interest rates. And I think people look in a low interest rate world, they look at housing still as a investment, as a savings vehicle. So the bottom line is the housing market is slowing, but it certainly hasn't cracked as it has in other countries.
Thank you very much, Aron. That is all for right now, but stay tuned to keep up to date with the latest economic news and Forex updates from Dúchascopy TV. Goodbye.